I wanted to ask you about actions against NBFCs. Typically, in the recent past, you've tilted towards imposing severe business restrictions on lenders instead of levying fines. Do you think there is a systemic risk concern here?
No, there is no systemic risk. In fact, I would like to emphasize that at the moment, at the system level, the banking sector and the NBFC sector, at the system level, they remain very robust. The various parameters, the regulatory parameters, the various financial indicators of both banking and NBFC sector, they continue to be very strong. So at the systemic level, there is no problem. But where we saw the problem was in the microfinance sector. You see, in 2022, we came out with new guidelines relating to microfinance lending. Earlier, the principle was that cost of funds, the interest rate was supposed to be the cost of funds plus 12% margin, which the MFI, the microfinance lenders were allowed to charge as interest rates. We deregulated that in 2022 because this 12% margin was becoming kind of a benchmark for everyone.
Sure.
We deregulated that and we expected that competition will result in optimization of the interest rates for the benefit of the borrowers. And who are the microfinance borrowers? They're basically the small borrowers, people who do not were not economically very well off. So therefore, we did that deregulation on the expectation that competition will lead to better, lead to reasonable interest rates for the clientele. Now, unfortunately, that has not happened. We have been constantly voicing the Reserve Bank, myself, my colleagues, on number of occasions, we have been voicing our concern. In fact, even in the last monetary policy statement, I have also mentioned that. Now, what happened is that what happened was that in our on-site and off-site supervision, we found a number of NBFCs charging exorbitant interest rates.
Right.
Interest rates going up to 40%, going up to 45%.
Wow.
Now, and who is the borrower? The borrower is he is a man of small means.
Right.
And these are not well-off sections of society. And a 40-45% interest rate or even 35%
is a lot.
I don't want your viewers to assume that if I say 35 is the tolerable limit. I'm just using it by way of a random example. Now, such excessive interest rates are usurious. And apart from that, some of the charges, like for example, a few days of delay in repayment, the penalties are exorbitant, and sometimes the penalties are not adequately transparent. So therefore, whatever measure we have taken, it's in the best interest of the customer. We found certain outliers, and even in these outlier cases where we have taken action, we have been in bilateral engagement with each of them for last several months. Now, when we see that appropriate corrective action is not taken, we engage first. And when we see after several months of engagement that corrective action is not being taken to our satisfaction, then we have to act and protect the interest of the consumers, of the customers.
Sure. And then banks have been reporting increased stress in unsecured retail loans. The RBI has raised risk weights in this segment last year as a warning. Does this remain a concern for you?
No, I think after we introduced those additional risk weights, etc., in November last year, the segments where we impose this additional we impose certain additional regulatory compliance requirements, the provisioning requirements. In those sectors, we have seen moderation in credit growth. So that has happened. There are, with regard to other sectors, we are closely monitoring every aspect of the credit market, every subsector of the credit market we are monitoring. As and when something is required, we will act and we will take preemptive action before the problems start building up.
RBI's draft proposal on liquidity convergence norms has been in the public domain for a while. Banks have expressed concerns about the potential impact on capital and by extension on credit growth. Is there a possibility of some kind of softening of your stance on this issue?
We have adopted in the formulation of regulations, we have adopted a very consultative approach. And that is the purpose of putting this discussion paper, to get comments of the stakeholders, to take that into consideration, examine that, and then come out with our guidelines. We have received a number of suggestions.
And what are those suggestions?
Banks, from the Indian Banks Association. We have got number of suggestions. Naturally,
Would you
they
like to
would
share what they
no,
are?
I mean there quite a few. I mean number of suggestions. So naturally, they would like some of them they want this not to be done at the moment. Some of them want a longer period, longer phasing out the entire thing. One point I would like to emphasize is that the discussion paper has arisen from certain potential risks which we see in the economy in today's age of digital banking, online banking, where withdrawal of money from the bank accounts can just happen in seconds. We saw some of it happening in February 2000, early 2023 in the United States, where a few banks came under stress. Our effort is to mitigate those risks, and it is being done in the interest of financial stability. But we will take into consideration the comments of the banks and other stakeholders and will decide accordingly.
So there is further talk of internationalization of the rupee. Where do you see that going? Particularly, Donald Trump, we are in the US, the presidential candidate from the Republican Party has indicated that if there is de-dollarization, any country that moves away from the dollar, he's going to impose 100% tariffs. In such a scenario, how do you balance trade relationships with countries like the US and also ensure that the RBI's agenda, the government's agenda of internationalization of the rupee continues?
You see, internationalization of the rupee should not be equated with an intention for de-dollarization. Both are different things. When we are talking of internationalization of the rupee, what we mean is that in bilateral trade settlements between India and another country, a major trading partner of India, our idea is to use rupee as a medium of settlement or the local currency as a mode of settlement.
But right now, mostly dollar is used, so it doesn't need
dollar is
de-dollarization.
We have, for example, with the United Arab Emirates, with the UAE, we have signed an agreement for the local currency settlement of trade settlements to happen through local currency. So importers and exporters on either side, they can do the settlement either by using the Indian rupee or by using the dirham, or they have the freedom to use the dollar. So therefore, when you are doing a settlement bilaterally with your trading partner by using the rupee or by using the local currency of both the countries, you are basically, it's a move towards de-risking your trade, because the entire global trade being based on one single currency can lead to concentration risks. If there are wild fluctuations in that particular currency, the rest of the world will have to face the volatility emanating from that. So this is a kind of a insurance, this is a kind of a de-risking your trade from the fluctuations or the volatility of the dollar in certain situations. And it is a flexibility which is being given to the traders on either side. It is not in competition with the dollar or de-dollarization. I think we should not look at it that way. It's basically we are completely on a different track.
The BRICS summit recently concluded, and a symbolic BRICS note was launched during the summit. What is RBI seeking on that? There has been some engagement.
So there have been some discussion. I mean, this was a proposal brought forth by one of the members. There is some discussion, but nothing has been decided.
But how do you protect national interests, especially with the kind of geopolitical tension we have with China?
You see, a single currency has its problems. The advantage which Euro had was that they had, geographically they were a block. They were all adjoining each other. So therefore, there are many challenges in thinking of a cross-country currency system. So, as I mentioned, some proposals, some thoughts were shared by one of the members. Nothing has been decided.
Okay, and my last question to you is that we are in the US and you were at the World Bank IMF annual meetings. Over the past 6 years, you've been coming to the US at least twice to attend these meetings, 12 meetings. How has the impression of India evolved over those past 12 meetings?
I think internationally, India's stature has significantly gone up over these years that you were saying. Today, whatever India does, whatever India says is taken much more seriously than ever before. Indian economy is doing well. It's expected to be the third largest economy in 2027. And the overall opportunities, the business opportunities available in India are also considered to be very bright. International confidence, international investor confidence on India has also risen, has increased substantially. So I think in the global roundtable today, India has a stronger voice than, let's say, a few years ago.
And who would you attribute this to?
I think the credit goes to, every stakeholder in the Indian system, in the Indian economic system, in the Indian political system, in the Indian social system. I mean, it's the government, it is the central bank, it is the other authorities, it's the private sector of India, it is the small businessmen, the MSME sector. I think there is a greater amount of optimism and confidence, even in small businesses, even in micro enterprises. Even micro enterprises today are using technology in a big way. So when I say the people of India, I mean all stakeholders in our economic system have facilitated this.
Governor Das, you've been so modest. I was expecting that you would say that the monetary policies and the initiatives taken by the RBI under your regime have contributed to this success, which they have. Thank you for your time. It was a pleasure speaking to you. We were in conversation with the Governor of the Reserve Bank of India, Shaktikanta Das. Thank you for watching.